Hello, everybody, and I welcome Curtis. Hello, Curtis.
Hey, Dave.
Curtis is a Canadian living in Japan. He's a successful entrepreneur who's basically now enjoying doing investing. We've been actually meeting on my channel for a while, and we started doing some kind of longer updates in 2022, which was the last bear market for crypto, for Bitcoin. It was actually a bear market for stocks. But this year, this is a big surprise. We have a bear market for Bitcoin and for the crypto, and we have really strong equity markets. So I'm sure we'll talk about that as well today. I prepared the presentation. I would like to talk a little bit about the cycles. Markets are running on cycles. And not just the markets, it's the whole universe. The whole human societies are running on cycles. All the planets are running on cycles. All the galaxies, everything is basically running in our bodies, our cycles, right? The markets are no different. And I think, like broadly, everything that I see on the markets today is kind of following the study that I have done 7 months ago. This is a screenshot from my study. The study is still on YouTube, of course. You can still find it and look it. It's called Banner Cycle Predicts 2026, and it's 73% win rate. And what it means, I took the Banner Cycle. Banner Cycle is very old study of Mr. Banner, who created this graphics for a commodity, I think, for a food commodities. And it's shocking to see what his study was showing and how applicable it is to today. When you look at, for instance, like he identified as the massive sell point year 1999, and you know it was just a year before the dot-com. Then he predicted another, the B year, the time to sell stocks and value of all kinds. He predicted he calculated 2007, and that was another year. 2019, that was just a year before COVID. And I was looking back, I was basically counting how many times he got it right, how many times he got it wrong. And I was especially interested to calculate, to basically do a math for the years that he calls the B years. And that is this line over here. And because 2026 is there in the B year, and he says...
So that would be a sell-off time?
That would be the time to sell the stocks and value of all kinds. Yes, that is the top of some kind based on his study. And I was checking all of these previous years, and it's 1999 there, 2007 it's there. But he also 2016 put there, and 2016 was wrong. 2016, as you can see here on the S&P 500 chart, that was the time to buy into the US, at least US equities. But overall, it was the time to buy the stocks 2016, not to sell them. But as you can see, the previous years, he got most of them right. And I have calculated that 73% of the times where he put this B year, 70% of 73% of them, you really needed to sell because there was going to be 20+% correction either at the end or near the end in the second half of the B year, or it's going to happen the next year. So of course, sometimes like he put into B years 1999 and 2007, but really you had the whole 2000 year to sell, you know, and it only happened I think at the end. So and you can still watch the video, it's 2 minutes. And even there, I specified further that it's 73% chance he is correct. And there is 55% chance that you need to sell near the end of 2026 or at the early of 2027. And only 18% chance that you should start near the start. You should sell at the start of 2026, which is already debunked because we had a very strong rally. So if you sold early this year, you are sidelined from the index at least. I feel like this was a very well done study. I'm quite proud on the results because I think we are going this direction. So I think that basically the end of 26 or maybe early 27 is the sell point. And I'm bringing also a couple of more cycle studies here. So this is the historical presidential cycle pattern. So what is really interesting is that we are kind of denying this because the second year, that's the midterm year, we actually are supposed to, this year is supposed to be the poor year for the stocks, and it's not. But even that is actually showing that the biggest trouble is happening actually, well, actually in Q2, and that's already kind of wrong, but around the Q3, we could still say. So the Q3 is problematic when you look at the historical presidential cycle pattern. Q3 of the midterm, that's the problematic. Let's now talk a short term a little bit. Then this is another cycle. This is the decimal. I can't pronounce it correctly. For the Dow Jones, for every year that ends with 0, every year that ends with 1, the past 100 years, what was the average Dow Jones movement in that year? And as you can see, the year that ends with 6 is kind of a sideways on average. And 2027, it's on the average some kind of a blow off top there and then some strong correction. I feel this cycle is quite complementing what I found out with the banner cycle. So this would complement that the next year, and this one is showing in the second half of the next year even, we are going to have actually some kind of a strong correction. It's very far for now. We can't say. I can make a thesis to you, Curtis, how it could happen, but let's talk about it maybe a little bit
But
later.
I don't see a fall off. I see a wonderful spike up before the fall off.
Oh yeah, okay,
So
okay, yeah, fair enough.
I'm looking at the top.
Fair enough, fair enough. Yes, yes.
I'm looking forward to that.
In this case, then the early 2027 is still going
But
to be really great, really blow
I hope so.
parabolic, maybe like this year even.
Hope so.
And in that case, however, still like the banner cycle is still, I could make a case that if you sell even, of course, you can never sell the top, but even if you sell before this, like let's say this will come true, what this cycle is showing us, what this study is showing us, and if you even sold before this parabolic runoff, you can still buy back lower because the correction should be like 20% plus. Now, let me talk a little bit of the recessions, because what the banner cycle is showing, let's talk about the next year or late next year or something like that. What the banner cycle is showing is some kind of a strong correction, 20% plus. So then we can, like we had the tariff scare, which was over 20% and it was no recession. We had 2022, which was also over 20%, it was no recession. But it also could be. We haven't had a recession since 2020. So this is, for instance, very beautiful schematic. Like US had 34 recessions since 1855. What do you see when you look at these graphics?
We haven't had much of a recession, right?
It's getting free of recessions, basically, as we go further in time.
No more recessions. That's it. They're done.
So we are taking lessons. Like I think we took big lesson from the Great Depression. That was this huge pink column here. You know, this was a whole huge pink, this huge part that was the Great Depression. We have taken many lessons from there. So from every recession, we take lessons.
So it looks to me like when markets are more free, the recessions are normal and healthy, but now for some reason they're disappearing. You could argue it's because of fiat printing or government spending, which is continuous, right? Governments never stop spending. And so the more they're part of the economy, it mitigates the downturns, maybe.
But still, also what I also see is that even though it's normal to have less recessions over time, this is a very clear indication, graphical indication of that. But there still are going to be some recessions. And we really, over the past, since 2008, we only had one recession taking 2 quarters, right?
Yeah, that's
It
crazy.
was we really are putting a quite, even though we are supposed to, we still will have somewhere recession. And I have done another study to this point. This is done by 2 separate AIs because AIs today are good enough to do this research. They're accurate enough. So each used a little bit different criterion, and each basically made me a graphical representation of where recessions occur. Mostly it's the years ending with 0 and 7. And that's this study right here that showed us that.
Right.
And also this one done by a different AI and using a little bit different criterion.
Right.
And basically the same conclusion, 0 and 7. So that is going to be also my rough estimate as where the next recession could occur, either 2027 or 2030. But even if you
Sounds
don't,
about right. Yeah.
But even if we don't have a 2027, we could still have a 20% correction plus 20-30% without a recession. And this is all kind of also confluencing what I've just shown you before about the other banner cycle and blah, blah, blah. So I feel like I'm assembling some confluence here. Oh yeah, I can just very, very briefly fly through this. I wanted to just mention inflation, GDP, consumer data. The inflation, Curtis, you know that it went up.
I don't think we're getting higher rate hikes, but inflation going very high would probably make me change my mind. Like you say, there's some lead time between the oil prices becoming embedded, whether they add to other products and services or that was just a blip. We were only at over $100 for what, 6 weeks or 2 months? So it wasn't like we had oil over $100 for a year.
We had over $90 for another 2 months.
Could be. I'm not an expert in any of that. So I think inflation is going to go down by the end of the year. It could go up in the next 3 months. I think I think Trump hired Warsh to cut rates, not raise them, and he'll probably talk about raising them, but not raise them.
Jawboning. That's what you thought.
Yes, I think so. I don't think he'll raise rates. Now, remember, as the economy does well, inflation also goes up, right? So part of inflation rising is because the economy is strong, right? So it's sort of there's many different sort of breaks and accelerations in these discussions, right?
Let me go to another slide. So this is a thesis of mine. I have shown you a couple of confluence that the next year we're going to have a 20% crash, 20 to 30%, or even a recession. So this, in these graphics right here, Curtis, I have brought a topping process of 2000. You have shown it on the chart, on the monthly chart. I have underlined this with these columns, these green and these orange columns, and the orange columns are the insider unlocks of the share unlocks from the IPOs that we had in 99 and 2000. We had many IPOs back then, and after they rolled, after some delay, the insiders were getting their shares unlocked. And as you can see, just as the IPOs were stopped rolling, and the unlocks for the insiders were rising, that was the 2000 top of the markets, which also makes sense to me.
Yes, I don't agree, but I understand what you're saying.
You see the logic behind.
Yes. I just think it's very different than 2000 right now. Remember, 2000 was the companies had no profits.
I agree. Yes, I agree. They were empty shells.
And the market was very different. And
I agree.
There wasn't so much tech in the stock market. There's a lot of reasons why it's different. It was different.
Okay.
Certainly, I think you're right.
It can be a correction.
Massive IPOs and profit taking is part of a top signal. It's part of the puzzle, right?
remember that the 2000, what we had there was a massive recession, 5 years of downside, 50% crash. So not, I don't think we are in that scenario, but we can have a 25% crash, or we can have a 30% recession for 1 year, and that's it. Not like in
Okay. Yeah.
2000,
Yeah.
right? Not
Right.
like in
Right.
2000, not in the very same. No, no, no. But
Yeah.
still some topping signs, right? I still want to
Yeah.
compare this, and then I have done research. This is estimated unlock schedule for SpaceX, Anthropics, and OpenAI. And as you can see, the biggest unlocks of the insiders will happen in the early next year, June,
Yeah.
April, May. But this is we don't yet know when the Anthropic and the OpenAI roll. That's another thesis. The Anthropic and OpenAI, they want to come around October this year. That's what they
Right.
want, and they are trying to push that deadline. However, if we have a correction in August, they will postpone. Then they would roll maybe a little bit later this year or early in Q1 in 2027. So you can see that also on this schematic, for instance. This is the SpaceX, and basically it went public in June 2026, and there is a continuous shares unlock, for the insiders of the next, let's say, 6 months, and then the Anthropic, if it rolls in October, then that's going to be until like April 27. And then the OpenAI, this is kind of a bearish scenario. This is a bearish estimate that it doesn't roll this year, but it will have to roll. It will come out public like around the March next year or so. So do you see what I'm trying to do here, Curtis, with this study?
We're timing it with 2027, right? A 2027 sell-off, right?
Yeah, yes, but I'm not like trying to make up reasons why the
Yeah.
sell-off should happen, but I'm trying to investigate, I'm trying to compare, and it also makes sense to me when these are just free IPOs, but they are like historic also. They have historic evaluations,
Yeah.
and so
Yeah.
so much new shares that will be unlocked to insiders that will have to make some impact on the markets.
So
One,
the money earned in those companies is private sector, right? So it's not in the public sphere, right?
Mhm.
There will also be a lot of multimillionaires created with those unlocks, right? And
Yes.
that money needs to go somewhere as well, you see? So the person
Mhm.
selling, if let's say I put 10 million into Anthropic, it's worth now
Mhm.
$1 billion. Now I have $1 billion. I dump those shares, someone else buys those, but now I have $1 billion. I might go buy Nvidia. I might go
Yeah.
buy something else. So it's not. So from a sentiment perspective, it could be a negative and cause a top, but in
Mhm.
terms of cash flow, not necessarily is it a one-way flow, right?
Yeah, yeah, this is what altcoiners have been telling me. Like, yeah, when Bitcoin will go to bear market, like they will have to do something with those cash. Like they will sell Bitcoin, and they're going to it has to go somewhere. And they
But
thought
no,
that it was
but
going to go.
so these people, where do you think they're going to put their money? In cash?
Well, if they like, this will be all included in Nasdaq 100 very quickly. SpaceX is
Yeah.
being included in a couple of days. Anthropic, OpenAI then will get included also soon after they go public. And if these get sold, then of course it's gonna drag the Nasdaq 100 down because they will have a quite good weight in that index. So then that will be dropping. That will drop another other participants in the Nasdaq 100.
But the people selling Anthropic, what are they going to do with their cash?
Well, I think that the first thing, they are not going to swap for Nvidia in the same day. So the first thing,
Oh,
they will
yeah.
sell for cash, and they will see what's happening in the market, and they will be looking to buy into something else, but not necessarily in the very same day. I do
I
not
see.
think
So
it will
you
happen
think
in
it's going
the.
to cause a disruption of some sort?
Yes, yes.
Right. Could be. Could be.
And
I'm
I'm
not, I don't
also
know. I've never really looked at it. I don't know what'll happen.
think this is going to play a big role, and I think this rolling of the IPOs and the insider unlocks will cause the 2027 let's say, crash or strong correction that I see in the cyclical studies that I started with. This is my thesis, at least. This is, yeah, like we can have another different theses, and thesis is just a thesis. It's never a guaranteed future.
It's something to watch for.
This
I
is
think
the
it's something
thesis
to
I
look at.
believe in. So this is my thesis. Let me go to another slide, what I have prepared. This is now, I'm debating, like, how will the rollout go? Will it be Q4 this year? Will it be first half 2027? One of these two, probably. And that's also what the banner cycle has been saying, basically. The top either late 2026 or early 2027, so the first half 2027. So yeah, this is something I was also saying on my channel recently. This is a very strong, to me, this is a very strong argument. This is a COVID crash. This one is COVID crash.
Yeah.
I measured that COVID crash, and then all of this above one, this is extensions. Okay.
Right.
This is Fibonacci extension, and 2 is basically the double. It's the same, the COVID. So the COVID crash was like minus 36% or so. So when we recovered back to the all-time highs, then when you add, I think 36% or so, you go to the 2.
Yeah.
And it's also very strong. This is psychological. This is very strong level that the market always watches for. The moment we reached it in 2021, that was a stop. This is a weekly chart, and a couple of, look how many weeks we just spent there, Curtis, and then we had 2022. Then I measured 2022. Do you see? This is the 2022, Curtis.
Yes, gotcha. Yeah.
Then we went to the market recovered. It went to the double, to the 2 right here.
I see. Yeah. Okay.
Look,
gotcha now. Yeah.
And this was to $1. So this was to me a confirmation that the whole market, because regardless of how big Elon is or the IPOs is or Trump, the market is always bigger, right? And the whole
go to the next one. So what is this? Where's the next level then? The next yellow line.
Speed up. So I measured the tariff scare. I measured the tariff scare, and I went to the 2.
Yeah.
7,440, and we crossed it. And the moment we crossed it, we start doing something, right?
Right.
Something similar than in 2020.
Yeah, because a lot of people trade on these types of metrics.
The whole market, I feel like, this is a big thing. This is a big thing. So institutions trade on this. So this is a really, to me, this is a very strong argument. So also to watch out for. However, the IPOs have not yet rolled out, so I don't think this is going to be now the 20% crash. Q3 starts in a couple of days, so I'm asking about Q3, and from this is my strongest argument that Q3 need to see some correction. However, because of my previous study, not the 20% or more.
No. Well, we're going to get Q2 earnings, right? And if they're anywhere near Q1, you're going to have a lot of very happy earnings reports, which
that's true. And also
so we'll see.
Earnings report, even the good news, as you say, good news are the bad news sometimes.
Maybe, yeah.
So it can be also the sell the news kind of event.
So could be.
This argument is basically telling me 10 to 20. Some of those
You're talking about the S&P 500, I guess, right?
I'm talking about the S&P, exactly.
Which would be like not the Mag 7, it would be companies, it would be the 493 of the 500, right? It wouldn't be the 7 of the 500.
It would be those that cause this parabolum here. So the hardware probably.
And they're up 20% this year, the Russell 2000. So if they fell 10, it wouldn't be that much of a disaster for some of those companies.
I should even cross this 20 because 20 is excessive. I should write here 15. So yeah, and in the very last slide, I have lots of materials. Unfortunately, I do not have time to go through all of them. This is all about altcoins and crypto. I wanted to talk about the upcoming narrative for altcoins. The first question that I want to, that everybody's probably asking, when? So I personally have thought it will be around 5 years still before this happens.
before what happens?
Thesis around this is the AI is going to go towards the direction of autonomous agents that can basically plan, negotiate, execute tasks. They can book you holidays. They can do lots of things. And well, it will not be able to do KYC. So it has, I think, the traditional banking rails like Visa cards. I think these are not ideal for this kind of a purpose. I actually think that the crypto payments, like Bitcoin Lightning, or of course stable coins, Ethereum, Solana, are ideal for this use case. So I think the AI is gonna be using crypto a lot. And I've been asking and discussing with different AIs this, like, what would you do today? And results are also very interesting because it told me that it would be using also Bitcoin. It would be using Bitcoin to store some of the excess liquidity because it believes Bitcoin is the ultimate store of value in the crypto space.
Oh,
And
interesting.
and nothing else is like that. But as for the everything that it needs to, all the payments it needs to do, all the lending it would try to do, or for instance, we have a project called Render, which is that the basically you can rent decentralized GPU computation power. This is very, very interesting and useful as well, but it also trades quite high given the premiums. Like you are paying much more for it than the centralized version because you are kind of paying the premium that is decentralized. But it's still something the AI will use. So of course, mostly AI will be using altcoins, but also Bitcoin.
But yeah, it's using altcoins for the transactions, right?
Yes, 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 yes.
But you're saying it would store wealth in Bitcoin?
It would store the excess liquidity in Bitcoin. That's also what it told me.
Ah, interesting. That's
Yes.
interesting.
To me, this is what's going to fuel the next narrative for altcoins. Yeah, sure. Everybody agrees it's coming. Nobody agrees how big. This is also what the AI was basically calculating how much money then will come into the crypto, how much it will cost, how much liquidity inflow. But important takeaway that I think that the next narrative that we will have in altcoins will not be based on just a pure hype as it was in the past, but this time it's going to be based on the numbers of the actual usage. Like we will see the actual throughput, the activity really go parabolic, something like we see with memory stocks. Like we really see the
Right.
demand for memory
Right.
parabolic, and the memory stocks have gone also parabolic.
And then it'll be which coins, though. Which coins are they going to use, right? Because they
Yeah.
won't need all of them.
For instance, this is the pie chart of where the value is locked today. That there is 4 billion on Bitcoin, right? Bitcoin is not. I really don't like when somebody says there is nothing on Bitcoin. Do you think like companies will be building on Bitcoin or on altcoins, Curtis?
My understanding is if this thesis plays out, so it creates more liquidity for everything and Bitcoin. Like the AI told you, it's going to be storing, it's going to be trading between Bitcoin and some other coin like Solana or Ethereum. It'll be
Yes.
giving the commands to the AI bots using that high speed coin and then going back to Bitcoin as a banking account, that sort of
Yeah,
thing.
yeah.
And or this becomes so popular, more and more people just get into the crypto ecosystem, and naturally Bitcoin and Ethereum, for example, would rise just because there's just going to be way more liquidity in the system, and people are going to go, oh, I can throw this into a Bitcoin wallet or an Ethereum wallet or Solana. I can put my money here and keep it there. So the whole highway, so to speak, will just have more traffic and all the coins will rise, right? Does that make sense? It'll just be a liquidity issue,
Yes,
right?
it does. But also, as you can see, in the top 10, like where is the most value locked on the in the crypto space? I've
Right.
underlined Ethereum and its layer twos. And in the top 10, out of the top 10, three layer twos are there and Ethereum itself. So this is still Ethereum is so far ahead in this. that
But in transactions, it's Solana's the winner, right?
transactions, but these are like kind of a small microtransactions. But when it comes to the products built on the platform,
Yes,
Ethereum is kind of
sure,
like undisputed. So
sure,
so definitely Ethereum
sure.
and their layer twos will have very big piece
Well,
in
and
this.
of course, then stable coins, right, are on Ethereum, right? So USDC, USDT. And
Yes.
so unless that gets changed, Ethereum would benefit from that as
Okay.
well, right? I mean,
So yeah, you can see again like the market cap of the stables on Ethereum and on its layer twos combined. Like this is a complete domination. Like Solana is somewhere only Tron is a competitor.
for certain, if liquidity, if you have robots using crypto in the trillions of dollars, Bitcoin's going to have more liquidity. The price is going to go up.
It will definitely not be left out. But of course,
Yeah,
the real throughput, like the numbers we will see, like really skyrocketing, like the demand for the usage, that will be in the altcoin sphere,
right,
number of
right.
transactions,
Yes.
coins sent over the network, but all the kinds of metrics that are out there. Another very interesting, I think the best AI currently is Claude. What is out of these 6 assets? I gave it these 6 assets: gold, SpaceX, Tesla, Curtis, Bitcoin, Ethereum. And I asked it, like, what do you think? What is the best, what it has objectively the best upside potential? So
Right.
it's a little too optimistic in my opinion, in some cases. But as you can see, this is their its answer.
Yeah, interesting.
Very interesting. Yeah, it thinks Bitcoin will be in new all-time highs around 200K, but it also thinks Ethereum will be in the new all-time highs.
Yeah, and then you should ask it why. I'm
Okay.
curious. Yeah, because the why is what matters, right?
But my personal time frame for this happening, people should be prepared for 5 years, and who knows what happened within these 5 years. But
Yeah.
and yes, also I wanted to bring up this point, Curtis. When you had your presentation, you mentioned that Bitcoin is going to be higher in 5 to 10 years time.
Yeah,
In the past, I disagreed with you.
I know.
In the past, I told you, and not just relatively recently, a couple of months ago, I told you that Bitcoin in 5 to 10 years time is going to be insignificant, like
Yeah,
a couple of thousands of dollars at most.
yeah.
And I have come back from that, I have to say.
You
Um,
recovered?
I think I was wrong, and I do think that the more likely scenario is that BTC is not gonna be insignificant in 5 to 10 years time. But I also don't agree that it will be $1 million, like the BTC community believes or thinks.
Right. What price do
Um,
you think it will be?
this is the BTC on the logarithmic. It's only a part. It's not the full history. But
Yeah.
if you could see the full history, it's basically something like this, and you can see the flattening. You can see the
Yeah, sure.
flattening. So
Sure.
I think the BTC is basically becoming more and more stable over time. So and the big fat 100,000 number is really a magical, a psychological. It's very powerful level, and I really
Yes.
think that's around to hover around that. That's destiny. I don't think there is asymmetric investing opportunity on Bitcoin unless we have what I believe will be the altcoin dominance in the future. Not just this AI, but also the bonds tokenized, stocks tokenized.
That's all happening. Yeah.
That's all happening. And do you believe they will be on Bitcoin, or do you believe they will be on altcoins?
I think Solana's trying to do it right now.
So more likely altcoins.
Yeah, but I don't think that has anything to do with my thesis about Bitcoin going up. But yeah, to answer your question, I think it would be on Solana.
I think this is very important when determining a long-term price perspective for Bitcoin, because
Yeah, I don't think so. I think it's one piece, but I disagree that that would be the make or break. Certainly, the more it's used, the higher it goes up. But I don't think it not being, I mean, even for the last 5 years, it's not been about that. Bitcoin's rise has not been about I mean, it's been about it becoming digital gold. It's been about it going into ETFs. It's been about legal frameworks. It's become an asset class. That's why it's gone up in my mind. Less so things like transaction speed or what you're talking about here.
Okay, point taken. But I'm now discussing asymmetric opportunities investment.
Okay, yeah, $1 million. Yeah.
I am now
Although that's only
discussing
10x,
that.
right? $1 million is only 10x.
Only, I'm not sure if it's
Well,
only 10x, given that the BTC market cap is
well, it hit 125. Let's say 100. Let's say it's 100 is some sort of. It would only be a 10x up. No, but I'm not going to argue about the $1 million thing.
Yeah.
I'm curious what price you think it will hit. If gold is 34 trillion, Bitcoin is 1.2 trillion, gold is 34 trillion. And in 10 years, think about how much money is going to be printed. So where do you think the price would be in 10 years?
If in 10 years I can have my beer for 20 euros, then Curtis, I am giving you the 1 million Bitcoin then.
So you're saying 100 is the inflation adjusted top? We just hit the top.
I believe Bitcoin will go up with inflation. Yes.
No, but I mean inflation adjusted. Take inflation out.
I would say that this is the number where we'll be hovering. Yes.
So we've already hit that. We've hit that, and that's it.
We hit that. Yes, we have hit that. But also we've only gone up. We were 70,000 in 21. So look how many years later, and we only went up double from there. Not even.
Yeah.
So
and inflation adjusted, we haven't much. Even to actually strengthen your argument, if you include inflation, we're really behind, really behind.
So imagine in 2021 when Bitcoin was 70,000. Imagine I would tell anybody, any Bankoven, anybody, I would say, what is the price is gonna be in 6 years' time? No one would guess that we would be below 100K. Everybody would say couple of.
But I wonder if you understand liquidity, because it's actually not even liquid enough to join global asset classes. It's just barely able to do that. And Ethereum may never reach that. The Bitcoin 1.2 trillion, Dave, is such a small asset market cap that almost big players cannot even come into the market yet. So it's almost like we're at pre-IPO with Bitcoin in many respects.
I have listened to many of these arguments during the BTC Prague.
But do you understand it?
There were the whole presentations made about how there is not enough Bitcoin for everybody. And how
the issue is there's not enough money in the market cap. For example, Ethereum, what's the market cap of Ethereum? It's
about
nothing.
A couple of hundreds of billion.
So it's not even the size of Micron. So if a Saudi prince wanted to come in with $50 billion, he couldn't, because he would price himself out. He would start raising the price against himself, you see? So there's not enough liquidity to trade Ethereum globally. And it may never get there, right? With Bitcoin, it's almost barely there. So you can kind of trade billions in Bitcoin and it doesn't move the price. So it's finally at that point you can actually trade it or buy it.
See. And also the Clarity Act will also create a legal framework for the larger entities to actually deploy more serious figures. Officially, they have been doing that in various other ways, unofficially, but now also officially. So the Clarity Act will be kind of supporting your.
So you could easily see an actually acceleration of price, like to outperform 20. You're saying it's going to top and that's it. You could see more of an S curve where it rises again. It accelerates again. I'm not saying it will, but it's definitely very, very, very possible that you could see.
You are talking about this.
Yeah. Yes. Not only adoption, because we do not have adoption. Right. Correct. And that S curve is not only adoption, but it can be price as well, right? And of course, we know adoption equals price in many cases with crypto.
So of course, nobody knows exactly what is going to happen. That's normal, right?
Right. Yeah.
I have heard also from the BTC mainly community, I have heard it tremendously over the past years how Michael Saylor is going to cause a supply shock on Bitcoin. and he was really trying. He was in the last year also, the higher we went, the more he was buying and trying to really supply shock and all
Yeah,
create
that has not happened.
something like happened with silver. Silver had a real supply shock, physical
Yeah.
silver, and with BTC never happened, even though Michael Saylor deployed tremendous billions
Yeah.
and lots of
So
effort.
the miners have been selling, hey, because they've been going into AI. So a lot of the miners have sold this top.
And also OGs also.
That doesn't mean I think it's going to a million, and definitely not in the near future. Over a 10-year period, could I see a quarter million? Definitely. 250,000 within 10 years, easy. If you're not,
Okay.
it just on inflation alone, about a third of that would be just inflation, right? But I was just saying that people are saying, well, Bitcoin's done, it's boring, it's been 20 years, it's
Hmm.
not going up, but it's actually just now entering global financial markets. It was a joke 5 years ago. Just now, it's in ETFs. The next also is they're going to be issuing Bitcoin as collateral and bonds. Now, it hasn't happened yet. It's one of these Bitcoin maxi things, but Bitcoin denominated bonds is a massive asymmetrical upside because you've got a transnational currency, right? You've got a currency that's not linked to the US dollar or any other national that is decentralized, that has a fixed supply and that could potentially generate yield, right?
It is true that the stable coins are just kind of a version of a fiat because they're all pegged to the USD.
Yes.
But also that's also what is going to be pushing the stable coins as they are, because the US has tremendous interest to create a domination of the stable coins that are pegged to dollar.
Yeah.
That helps the USD,
Yeah.
and Bitcoin doesn't. Bitcoin goes against it. So US is incentivized to push for more stablecoins, which will create the networks on which the stablecoins are more valuable.
Yes. But then I've heard this term, it's called Gresham's Law. Have you heard of that? And it's basically that people choose the better currency eventually, maybe not immediately, but they choose the better currency. And
Hopefully.
so let's say the US government is pumping trillions of dollars into USDC, but guess what? Each of those USDC can go to a wallet and be transferred into BTC, right? And the robots are already telling you they prefer Bitcoin, right? They already told you that. So,
And
which
then
would you store your money in, USDC or BTC?
every single time I have chosen USDC because the Bitcoin is not stable enough for me,
But I
because it
mean,
has
long
big
term, if you were,
drawdowns.
yeah, but long term, if you were going to make a bet on inflation continuing,
Hmm.
would you rather have a fixed supply or a printed supply? Obviously, you choose a fixed supply, right?
I just had a discussion yesterday with a young man who who is quite like really fine young guy at 30s, who is have a good job in a Volkswagen in a management, and goes to Germany and stuff like that. And I was asking him, because he's a boyfriend of my niece. I was asking him also, do you do investing? Like, do you invest? And he says yes, of course. So I was asking like, okay, and are you interested in like cryptos or something? Like no, like he has he chose some index of some 50, not S&P, but some other index, different one. And he puts it there that he doesn't want to do any kind of cryptos because he doesn't want to care about having drawdowns, because he doesn't
Yes,
trust the cryptos. And
yes,
this is, I know he's just one guy, but there are millions of other like him thinking the same. They don't
yes,
yet trust enough crypto because it has these drawdowns. And that has always kept me from like, I always prefer stables to BTC because I didn't have these drawdowns there.
yes. But as your portfolio grows, you'll want to have different risk reward pieces. Like that's
Okay.
therefore you would not order or own stocks either. You would just own cash. You would never have stocks. You
Uh-huh.
would
I
never own
see what you
Tesla,
mean.
right?
See
So
what you
now
mean.
I agree. I don't want all my money going up and down either. It's called the volatility of the portfolio, and it's very stressful. That's why you have different buckets. And the point is, you don't need all of the world's money to go into Bitcoin. You just need 1% of the world's money to go into Bitcoin,
But also
right?
my point is that, as we let's say that we are here in with Bitcoin or so, in my view, okay, I know that your view is S, but in my view, we are here, so the volatility should be getting lower. And if that
Yes.
will be the case, I will be then deciding to favor maybe BTC to the stables because of these lower drawdowns over the
Which
time.
ironically would put the price up and you start becoming more like my S, right? Do you see? Do you see?
Very
Right?
interesting thought, very interesting
Right?
dynamic. That's
And
very
it'll
interesting
it'll
dynamic.
hit like a key point where people are like, oh, we can trust this. Oh. So actually, I agree with what you're saying. The volatility is part of the reason most people don't like it. You're right.
So thank you very much, Curtis. It was a very fruitful meeting, very interesting points and very enlightening. I hope you enjoyed mine.
Yeah, yeah. No, it's good. We get better and better at this, and I think it's more smooth, and we know how to deliver our ideas better.
I also hope you enjoyed our talk at the end.
That's great. I want to get the update on why Claude thinks
I will.
Ethereum's going to 12,000 in 2 years. Don't show Mark.
Okay. Okay. Thank you very much, and hopefully we will meet again when the time comes for more updates.
Okay. Take care, man.
Yeah. Bye bye.
Bye bye.